Punjab National Bank reported the third quarter numbers on Friday. To talk about that and a lot more, joining us now on ET Now is the CEO and MD of Punjab National Bank, Mr. Mallikarjuna Rao, in conversation with us at ET Now. Mr. Rao, appreciate you taking your time out and speaking with us today at ET Now. Let me first begin by asking you about the third quarter numbers, reporting a decline of almost 18.5% on a sequential basis, net profits at 506 crores. However, for the year, you've set yourself a target of close to 2,000 crore rupees. So how are we, looking at how things are going to shape up in the fourth quarter? And are you hopeful that with the economic recovery picking up for Punjab National Bank as well, there are good days ahead?
Yeah, certainly. I'm not looking at quarter-on-quarter changes within the profitability because overall benchmark what I've indicated when we declared the results for March 2020 that the year 2021 we will have a moderate profit overall the year, but our endeavors would be to book the profit every quarter so that in the process we can also strengthen the balance sheet by providing maximum. That is what we have done. If you look at our provision coverage ratio, it has gone up to 85%, including the TWO. Excluding TWO, it is around 73%, which is a pretty good position in terms of the coverage to the assets in terms of provision. With respect to the profit, we still stick to our estimate of achieving 2,000 crores by March. Already in 9 months, we have completed a little over 1,400 crores in achievement. So remaining, we are very much dot on that. With respect to the stress, what we have seen because of the pandemic, yes, definitely pandemic has impacted overall across the globe, but our country is no exception. In terms of the banks, commercial banks, there has been a lot of pressure on the stress, that is quality of the assets. As a result, what we have done is we have identified those as well. Those Supreme Court judgment currently bars from identifying NPA until the decision is coming forth. We have identified a pro forma NPA, and transparently we have shown in our presentation when we have declared the results for December, whereupon we have provided them 100%. We have de-recognized the interest already. What we have taken 100% means which is applicable provision, that is 15% of the provision. As a result, we do not carry any legacy of making provision for these pro forma NPA in Q4. So in those lines, the strengthening of the balance sheet has been much better. In the last couple of years, PNB is doing well. So I don't see any reason why PNB should not do well in the year to come. Yeah, please.
Right. Mr. Rao, allow me to come in on that. While you're talking about asset quality and you're saying that, you have made significant provisions coming in there as well, your net NPAs have in fact reduced. There is an improvement on the asset quality front. What do you really attribute this to? The fact that there are more recoveries coming in with the Indian economy doing better? Or do you believe that this could be on account of the forbearance that the RBI has given, as well as the courts also stepping into the matter to provide relief to people?
No, there has been an improvement in the collection across the country respect to all the commercial banks from August onwards. It was much better in October and November, though in the month of December it was a little dampened. Again, in January the collections have been better. So overall in the retail and MSME segment, there has been an improvement in the collections. We see that the pandemic impact is over. Now economy is coming back robustly. The collections will be much better in Q4 as well.
Right. While you're saying retail and MSME sectors are showing some sort of an improvement, where do you see the other bulk of the stress really coming in from in terms of sectors?
It's only some sectors like hospitality, tourism sector, aviation industry, and some of the industries where labor intensiveness is high. These are the industries where the problem is there. There are quite a few industries identified by Kamath committee saying that the stress is more. That is the reason why restructuring window has been opened for them. So these sectors also will start doing well after 1.5 years since we are giving the restructuring window to them. So overall economy will come back in terms of all the sectors in next 1 year, but majority of the sectors are coming back very fast.
Mr. Rao, allow me to come in on that and ask you about the provisions as well. Will provisions remain elevated, or do you see an increase going forward, or is this, the kind of peak that we've seen, and from here things will kind of look better?
I am of the strong opinion that things will be better from 21-22 onwards. Whatever provision requirement will be there, whether it is an aging provision or any accounts where fraud has been declared to make provision to the 100%, or even stress-related provision. PNB, from the PNB side, we would like to complete by 31st of March. so that in 21-22 we will not carry any burden of legacy. And with respect to NPAs as well, I am of the firm opinion that 21-22 should be much better, not requiring high provisions during that year particularly.
Right. Also, talk to us about the non-core asset sale as well. I want to understand from you, where are things so far. You have also, given up your stake in UTI AMC as well. From here on, have you identified which are the assets that you will look to sell? Because there is, of course, a lot of emphasis in the budget as well, whether it is PSUs or PSU banks. The government is now asking all of them to hive off their non-core assets and be able to raise capital.
Correct. As you rightly said, we have reduced our stake in this UTI AMC, thereby 167 crores of profit we have booked in the month of October. Results because of the amalgamation, we have inherited a good amount of real estate assets, which also we have identified for sale of them. So we are expecting around 500 crores to be extracted before June 2021 by sale of these properties. It all depends upon the demand for sale of property. There are various properties across the country we have identified. So with respect to other monetization by the government of India, they have got a lot of plans in terms of disinvestment in PSUs or otherwise. So from the public PNB's perspective, we have already identified assets worth 500 crores to be monetized before June 2021.
Mr. Rao, while we're talking about asset quality and recoveries, also talk to us about the proposal of a nationalized ARC and an AMC that has been put in place in the budget. So finally, there is a bad bank, in place that will be operationalized very soon. What kind of cash generation do you expect from the assets that you will be looking to now to transfer to this bad bank?
See, the discussion about bad bank has been in the public domain for the last 1.5 years. Even in the IBA level, we have discussed in detail. We have also recommended from IBA on behalf of all the banks to Reserve Bank of India as well as Government of India. The fundamental purpose of bad bank is to aggregate the bad assets and then create an environment of sale through single window, so that the person who is bidding for the asset will not have botheration of going to different banks in the consortium for getting the portion of the sale. This is the fundamental point. Second, simultaneously in the last 4 years, because of IBC, there has been some element of maturity in the market in terms of creating a bidding process for the assets and also seeing the successful bidders for running the unit if it is an ongoing concern or pushing through the liquidation. There are foreign funds who are very much interested in investing in ARCs as well in our country, awaiting for the approvals, and some of them have been already given approval. So coming back to ARC muted by Honorable Finance Minister, whether we call it as a bad bank or otherwise, is a good decision taken by them. I am very sure that in next 1 year, there will be a good amount of maturity on that. Large amount of capital is not required because assets will be transferred to that AMC or bad bank, whatever we call, before it is finally sold. So it is a process which will definitely give more smoothness to the ultimate purchaser.
Right, right. Mr. Rao, also, the budget has made a provision for almost 20,000 crore rupees in terms of bank recap. Do you expect any of that money to also flow into Punjab National Bank? And also, given the fact that PSU bank equity valuations are low, does that really make equity raise pretty difficult for a bank like Punjab National Bank?
First of all, if you look at the market sentiment at this point of time, it has been buoyant towards public sector space. Now, coming to the requirement of capital for Punjab National Bank, we don't intend to request government for the capital because the 20,000 crores could be required for other banks which are in PCA currently. For us, we have gone to the market. We have taken 4,000 crores through Tier 2 from the market in the month of October, July, and November. And then we have gone to the market in the month of December to capture 3,788 crores through QIP. Further 500 crores we have taken in 81 bonds in the month of January from the market. Our overall estimate is 14,000 crores, and remaining 2,581 and 3,200 in QIP, we are contemplating to go to the market before March in the current year. So we are very confident of getting this money from the public perspective. So as such, we are not interested in going to the government, requesting government for the capital. With respect to the market cap or valuations, on the contrary, from the investors' perspective, it is a wonderful opportunity for them to invest in public sector space and specifically PNB. so that in future they will have a better valuation or better position to their investment.
Right. And before I let you go, Mr. Rao, this is going to be my final question for you. The budget also has announced 74% FDI in insurance as well. You have a few insurance ventures. Will you be looking at reviewing your shareholding there?
See, currently we have two insurance companies. One is PNB MetLife, where we have a 30% stake. Another is Choice, Canara HSBC, Oriental Bank of Commerce Insurance Company. Because of legacy through merger, we got that ownership. We hold 23%. Both these companies are non-listed companies as on today. Both these companies have enough capital in terms of their working. As such, we don't have any plan at this point of time to increase the capital. However, the companies are willing to go to the market for listing so that the pricing will be defined by the market forces in terms of their valuations. So these two companies will be working hard towards that direction. But at this point of time, currently we don't have any point with respect to increase, because MetLife is a FDI only. Their investment is limited at this point of time. So while the government has permitted up to 74, since capital is not required as on today, it may not happen as on today, but we'll have to deliberate on that.
Okay, all right. On that note, Mr. Rao, appreciate you taking your time out and speaking with us today at ET Now. Thank you very much.